What's going on, guys? Zach and Spence here from iTrends, bringing you guys another market prep session. Today is the 10th of July. We're going to be talking about what we got going on for the week, the upcoming week, which is a pretty big week for us. We got CPI in the market. If you trade at all, you know exactly what the CPI is. It's Consumer Price Index. That is our inflation index. It essentially tells us how much things in different categories have gone up month over month and year over year. And we have expected in previous numbers that we are able to compare them at. And so therefore we either see an increase or a decrease month over month, year over year, et cetera. So moving right into it, skip all the promo stuff, moving right into it. This calendar this week we've got on the calendar Monday, really light day, which is awesome. Monday and Tuesday, really light day, which is really awesome. FOMC member Williams speaks on Monday at 2 p.m. That's kind of a whatever thing. On Tuesday at 12 p.m., we got the EIA, which I can't remember what that stands for, the short-term energy outlook. So that will be impacting energy stocks, oil stocks, et cetera. So if you're big into those or looking at those on the week, just be aware of that at 12 p.m. Eastern on Tuesday. Wednesday, big day. That's when we have our CPI release, core CPI and regular CPI, month over month, year over year. Now, the core CPI is the reading without gas or energy rather, and food, which are the two sections of the report that experience the most inflation increases right off the bat, right? So we're expecting core CPI month over month to be the exact same. So that's what we're expecting. At the exact same as last month's read, excuse me. Year over year, however, we're expecting it to go down 0.2. So we got to really pay attention to that, because essentially they're saying that essentially what that's telling us is that they're assuming that inflation is super high because of high energy prices and high food prices, et cetera. And that's really what's impacting the reading. So let's see if we actually end up getting a 5.8 reading year over year. If we get less, that could be a little good for the market, a little bit of a relief for the market. If it's actually higher and closer towards 6 or even above 6, then that's definitely going to come as a shock. Regular CPI, so there's core CPI, regular CPI. Regular CPI is with food and energy, those high inflationary sections of that report. We're expecting 1.1 percentage, which is 0.1 percentage over last month. So month over month, we're expecting 1.1%. Year over year, we're expecting 8.8, which is up 0.2% from last month's year over year read. So that's interesting that they're still expecting that inflation is still rising, majority or mostly because of energy and food, the impacts of energy and food prices. So very interesting. If we see high reads on all of that, we're already expecting really high. So this is not good. We are expecting a little neutral, like our expectations are neutral, but overall, we are still propped up in an inflationary environment. So 1.1% month over month, very high. Year over year at 8.8%, very high. So these are some high numbers. So if we come in higher than expected on the month over month, especially, but even on the year over year, especially in core, that'll be not so good. So Thursday, we have PPI, also another important report, but far less important than CPI. Just gives us a little bit of a read on what it's like for the producers and how they're getting affected by inflation, et cetera. We have Jobless Claims at 8:30 on Thursday as well. And then skipping to Friday, the end of the week, we got core retail sales. That's going to be really, really important for your big retail guys like Amazon, as well as Walmart, Target, Costco, all those guys. And then you got your export import prices and your industrial production, as well as Michigan consumer sentiment. That will be posted. That calendar will be posted in the description if you care to look at it and or save it for your own uses. It has all the expectations and the previous month percentages and or just numbers, data points on them. So feel free to check the description. So let's move into the market. This week, let's go to QQQ right off the bat. So last week was an interesting week because we did have direction. The direction was up. However, there was lots of fake breaks to the downside, especially starting off the week. A lot of couple double fake breaks to the downside, honestly. And it was just overall just interesting trading week. It was very much so a roller coaster with direction. It felt like roller coaster because of those fake breaks. We had fake breaks to the upside, fake breaks to the downside. Being that this week is not only CPI, but also our monthly expiration, 7/15, we could see a little bit of a roller coaster again this week as directional. I'm not entirely sure, but I'm personally going to be expecting some more fake breaks to be entered into the market. Being that it's CPI, personally, I'll probably be taking smaller positions just overall. as well as being faked out quite a few times last week. I personally will be taking smaller position sizes. So for me, this is what I'm looking for on QQQ. This is a very interesting range on the upside. So let's get rid of the bottom side first. Underneath 291.27, I can see us trending back towards this 288 zone. Underneath, it isn't until underneath we get this 287 where we get a real structural break, and the trend will be obvious that we will be continuing lower. However, if we start to form bases at 287, we might be range bound in between 287 and 295 for the rest of the week. Say we start our week towards the downside, which we kind of are here on futures. We're down 0.5% so far. It doesn't reflect in QQQ until tomorrow, or actually until midnight. But let's take a look at the upside, or excuse me, rather, let's backtrack 1 second. Underneath 287, I can see us as low as 275 on the week. If we had a really bad CPI read, like a red day into CPI, and then a really bad red day on CPI release, I could see us even closer down towards this 270 mark. Now above 296 is where I'm looking for more longs and buying off demand. Now, what's interesting is about this is that you have your psychological level at 300, which we did have quite a bit of consolidation in the past few weeks around this 300 level. But you also have this significant support that's overhead. So it's a resistance for us now at like 304. The zone is really 302, 30 to 304, let's call it. And that was when we had a short week and we just range bound traded short week. This whole entire week it was their first week of June. And that's going to be really, really difficult to break above. So ultimately, 300, and if we didn't have this price action here, would be the easy supply zone that we could play our rejections off of. But we have this odd little zone just 4 points above it. So we might actually trade in between this 300 and 304 for a day or two before actually breaking above it or rejecting it coming back down. So with that being said, my thoughts are that I really can't maintain a bullish standpoint overall until we're really above this 315, and then it gets to 330, and we have to decide from there. But even on a weak statement, it's a little bit difficult to be super bullish until we're above 305. And once you're in 305, you're going to be trading in between this range in between 305 and 315. So this is going to be a kind of a difficult range on the upside unless we just blast through it, right? Get really low CPI numbers. People are feeling happy and juiced and they want to buy the market up. That would be a scenario that I could see us pushing straight through up to 315, although that doesn't seem very likely to me. So let's get into some of the trades here. I'm going to bring you 3 trades. I think Spencer's going to bring you 3 or 4 trades. We're going to talk about Amazon Prime Day. We're going to talk about some Tesla and Twitter news, etc. So be prepared for that. First, we're going to take a look at AMD here. AMD. So let's take a look at this on the daily. We had really big sells from 85 all the way down to 70 level where we bounced off of, which is a previous support. If you look all the way back about a year ago in September, big support for us. And we had nice 4 days of green here with a little gap in between. And so I want to drop this down to the hourly here and show you what I'm looking at. So basically, these are Monday, Tuesday trades, right? These price targets, these price levels, are going to hit within the first couple of days, right? So I'm looking underneath this 77.68 for us to come back down to 76. And I'm not super confident taking out, like if I were to swing this trade, I wouldn't be super confident unless we had already gotten up to 305, 300 and 305 on QQQ and saw a massive rejection for me to swing all the way back down to this 74 to 72 range. However, the trade in between 77.68 and this 68 to 65 zone is a really, really nice trade. Definitely lots of percentages to grab there, 100% plus for sure. So I'm looking underneath there. We'll get into contracts in a second. Above 80.1, I'm looking for us to trend overall back towards this 84 zone. However, with a slight stop at this 82. So that'd be your first level of take profit. We range above there, our base rather, we base above that 82. I can see us trending back towards this 84. Then you reassess there to trade back up to this 85 to 86 zone up here. So let's take a look at some contracts. Above that 80 level, these contracts are really cheap, so you might as well just buy at the money when you can, 81s or 82 calls. And then underneath that 77, be looking for the 75s or 76s underneath that 77. 75s or 76s, and 81s or 82s. All right, let's keep it moving here. So next stock. This is like Jim Cramer's lightning round. CRM. I'm only looking on the downside here. So I'm looking for the Dow to hit resistance and reject back down. We can take a look at the Dow here in a second. But under CRM, I'm looking for under only. It's been underperforming the tech sector. As we've seen bounce, it's actually been holding up okay, but on this recent bounce is more so what I was talking about, where we didn't really see the continuation that we saw in other tech stocks, Amazon, Google, Apple, et cetera, right? It pushed up, it had pushed up and then pulled right back, and now it's starting to make its way back up. So it's showing signs of weakness there for me personally. And so therefore I am looking underneath this 170 break to take it all the way back down to this 164. I do see it eventually coming back down to this 155, although we would have to have a series of bad news. Like I said, that scenario where we were to sell into CPI and then have a bad CPI read and continue to sell, that's where you'd probably see CRM at 155. For right now, I'm just looking for underneath 170.76 towards this 164 zone that I have here. Now, looking for contracts, it's interesting because you have the 2.5s. So you either got to go 170s or buy 175s. That's really what you're looking at. So 175s would obviously be in the money at that point, but perfectly okay to buy those if you have the capital and can do that. If not, I'm looking at these 170s. The furthest I'd go out is these 165s for sure. I know we're looking for the 170 break, so you're only 5 points out, but I would stick close to the vest on this trade here. So only looking for the downside on that. And then this next one, I'm actually only looking for the downside as well. This CVNA, Carvana, definitely hurt. Spence just told me a fact as well. The used car prices, or sales rather, are down 7%. So that's obviously not helpful to Carvana. Also, repo rates are getting higher and higher and higher. So there's definitely an issue going on with people wanting to buy cars. On top of that, you've got an extreme supply issue in global for every single product. But for cars, it's very important, especially when you're a used car dealership, or even they sell new cars as well. But people are not going to be, the first thing you're going to buy in this high inflationary environment is probably not going to be a new car, right? So Carvana is definitely under some pressure here, right? So underneath 24.72, I'm looking for this return back down to this 21 zone. I've got a really big zone here. This is your bottom zone that I've outlined a while ago, between 22.32 and 20.57. So realistically speaking, my first take profit would be at 24 or 23.96 here, 24 flat, let's call it. Underneath 24, my second take profit would be 22.5, and my third take profit, if we could see it, would be 21.18. So with the shorts, this is interesting. If you don't care about being a little too close to expiration wise, you can absolutely take a weekly. I was looking at these 25 puts or the 23 puts, really in between. I guess you could go for the 24, so the 23, 24, or 25s. But if you wanted to grab some time, let's take a look out here and see if there's anybody piled up on these. I hate when it brings up the NA. Piled up on these weird expiration dates. These are getting too pricey, and you're going to see the full move before 33 days for sure. Honestly, I would probably stick to these weeklies. I really stick to these weeklies. These 24s, 23s, or 25s. I'd be more likely to go with the 24s as a good in between, and it's underneath, right? Our 24 is the break, essentially 24.72. So those are the trades that I'm looking at this week. With that being said, Spence has a couple that he's going to bring to you guys right now.
What's going on, guys? Still Ham here. I did want to say something with that AMD trade, or if you're looking at MU or any other semiconductors, watch out for Taiwan semis. They do report. So that'll be a really, really key sign for them to see how they're doing and if they're backed up or supply is there. Now let's get right into it. Let's go to Amazon. Amazon Prime Day is the 12th and the 13th. So really heavy bullish flows coming into the 115s last week. I'll be looking for above 116.75 to play the 120s. Keep in mind, there is a resistance at 117 that can be a little testy. So I will be in and out of this trade pretty quickly, or if we see a break, we'll continue to run. If we're looking towards that downside, I'm looking at 114.45. We break that, we're going to go towards 113, potential to get all the way down to 110.26. Next trade I'm going to go into is Meta. Tons of bullish confirmation last week. We're still looking at 172.45 for potential upside. I do want to see how it reacts to the Twitter news, which I'll get into next, which all the social medias have been taking a little hit because of that news. But I'll be looking for Meta to break over 172.45 or come under 168.78. That being said, we'll move into the big bad wolf. We'll go to Tesla. As many people have, if you're plugged into the news, you will know that Tesla did, or Elon Musk did break his deal with Twitter. Twitter has confirmed that they already picked their law firm to go against Elon Musk. So it should be an interesting event. Now, do know that in the deal, it said if a financial or agreement couldn't be made by October 24th with an extension for 6 months without significant due diligence and detail, that Elon can get out of this deal or potentially pay that $1 billion breakup fee. Now, with that in mind, you have to understand that Elon sold Tesla up in the 900s, so he is still very profitable. And with a person like Elon Musk, he is potentially going to just string this out and let Twitter pay extreme amounts for getting out of that trade. And if you are part of that Twitter CEO or the board, you have to worry about what are you going to tell your investors that you're spending cash flow on a lawsuit and that's your best potential for upside? Or are you going to let Elon buy out your stock because that's potentially he's the only suitor and Twitter goes down in the 20s if he's not there? That being said, on that news, Tesla saw a nice breakup after hours. And if you were in iTrends on our Discord, in our live chat, you saw we did get into the 800 calls. So I'll be really interested to see how that opens up. That being said, Tesla over 783.16. We can see some real potential upside. 762.67 is another potential towards that up or pull back to and to continue further because it is currently at 770. Now, if we do get up towards that 795.26 and Tesla continues volume, we could see a push up to 923.06 if Tesla gets into that squeezing mode. Now, if we're looking downside, we are looking at 754.27, which we noted as an extreme pivot point, or 766.94 under that as well. We'll have to see how it opens up and stay tuned to see how that trade continues. Another trade I want to bring up is Square. Bitcoin price is holding. We could see a potential Bitcoin hitting 20.15 before rejecting back into that 20K area. Square has been moving extremely well when it comes to that options contract. I'd like to see above 68.74 for some 72 call weeklies, or we break down under 65.27. Do have a tight range on this. We could see that 60 put really pay off, especially with CPI coming in on Wednesday. That being said, Zach did bring you guys QQQ, and something I did want to mention just briefly, maybe not contracts, just to look out for is Apple, because Apple is a major position for QQQ. So Apple saw an extreme breakout over that 145 we highlighted in our Sunday market prep last week. If you got in those option contracts, those calls, it paid significant. I see Apple at a maxed out top side 151.82 if all goes well. I'm more looking to this to crawl up at that 148 level and reject back down towards that downside. Now, we would have to get an extreme break, looking more at that 138.75 level if CPI is bad. Everybody runs for the hills, and we could see back down to 132.61. Another stock I want to mention, and I got one more after that, is Google. Now, Google does have their stock split on 715. If you look at this chart right now, we are forming a W pattern. If you have bought our indicator and pattern books, you'll see the W kind of a little choppy, but you can see it forming. If Google were to break out over 2387.07, we could see a potential bull run all the way up to fill that zone where Zach has marked on his chart towards that 2,500 with that stock split coming in mind. So you'll be looking at the next week out contracts. Last but not least, our last trade of the day is going to be AFRM. AFRM is a very interesting stock. We do see that we are holding and pinned up on this volume shelf when it comes to the volume profile. We're looking for AFRM to break over 23.84 to take some 24 or 25 calls. I'm particularly interested in the breakdown under 22.05 for a push back down to that $18 level. So we'll be keeping a close eye on that and seeing how that forms out. If you want to get any of our live alerts, head on over to our Discord. And if you like hearing our voices, this video will be posted up on YouTube. Hit that like, hit that subscribe button. If you don't want to hear us, hit that subscribe button so you can avoid our videos. Thanks, guys, and I'll pass it back to Zach.
Thanks, guys, for tuning in. We hope you got a lot of value out of this. And if you're new to the channel, please, like you said, drop a subscription, drop a like for us. It really, really helps. And a comment. Actually, the comment helps the most because it lets us know what we're doing good, what we need to do more of, and maybe what we need to do less of as well. So that's all on you guys. So please help us out with that one. If you are completely new and are not in our community, feel free to check out the links down below to join our Discord. Check out our website where we have more information and ebooks as well as some merch for us if you'd like to support us. With that being said, though, we are going to get to the prep that we have to run for our live, which we do every single Sunday and Wednesday. We know we record this, but we also do it live as well for everybody that wants to ask questions in game, if you want to call it that. But anyway, with that being said, we'll see you on Wednesday. And we've got some really good videos coming up. An impulse video is coming out this week, probably towards the later end of this week. So stay tuned for that. We'll be talking about impulses versus when you have consolidation and impulses, the difference between the two. So with that being said, we'll see you later. And iTrends out.
Hold on.